Good evening, traders. This is Christian from Hertz Traffic and Trading Group, and this is your end of day market recap for Tuesday, the 29th of July. I did some fixing here with the layout here, so I hope that helps. I'm new to streaming, so I actually appreciate your comments or feedback. I saw those last night, so I was like, oh, okay, let me see how to fix these things. So by all means, please, if there's anything that you're seeing in this that doesn't look right or could look better, I appreciate that feedback. So let's get into the market action today. Not the great market action, not the greatest market reaction. By the way, the risk disclaimer for this video and live stream is right here. Please read the full thing. Everything that we're going through is for information purposes only. So where do I want to start with today's price action? Well, number one, not great breadth. This was the fourth day in a row where the breadth has really been poor. What I'm referring to is like names that are advancing versus declining, up volume versus down volume. So today, I think that the down volume in the New York Stock Exchange was like a little bit north of 60%. So over the last few days, what we've seen is just a little bit of a change. If you've rewind to about a week ago, you kept kind of seeing an underlying bid in the market. And part of that, I think there's a number of factors that contribute to that. But one of them was that CTAs were buying. Like I heard that they were buying every single type of market dip that was going on. I don't think that's going on this week anymore. And that's probably been pretty exhausted at this point. So at this point, there's a couple things, and there's a couple, reasons why this market, and I know there's a few market commentators that are saying this, but it makes sense to me, so I'm going to use it. Yeah, the market seems a little bit tired. It seems like it needs a little bit of a rest. Again, these are all logical things. Also, I don't really want to get into like whether it went too far with like the meme stocks rallying, but I think a lot of stocks. There was a lot of participation in this market. We saw a lot of really aggressive, good-looking moves, but you know that can't last for a lot of groups that don't have a lot of earnings behind them. They're just moving up purely on momentum. That can't last for forever. And it's all part of a normal market, especially I think, another factor at play today is that we've got a lot of earnings reports, and some are good, some are bad. And I think that you want to be careful about like who you're listening to or social media, because what they will tend to do is they will go over the bad reports. And we certainly have that going on. I'm just going to share a different screen with you just to kind of show some of that. So let me stop sharing for a second and let me bring up a different screen. And I want to bring up the regular market today. This is also in our midday post too. I give you the same information, but just so I can increase the font here so that you could see this. And I am going to go over the bad first in terms of names that fell, and I'll go over large names too. Let me get the right screen share here, and I'm going to window, and I'm going to share this screen. All right, and we're going to click on here. So you could see, today, and by the way, this is any name that was down decently that was over $5 billion. But you could go through EXEL, Whirlpool, Spotify, Carrier, UPS. VeriSign was down. That was because of a secondary. What else did I see that was down on decently on earnings? JCI, UNH, right? So you think you look at this and you Stanley Black & Decker was another name. You're like, oh my God, this looks horrible, right? There's a lot of names that fell on earnings. Now you got to look at the positives too, right? And this is why we do compile a watch list of earnings strength and gap list. But you got Sanina stock up 23%, CVLT stock up 18%, AMKR 18%, Rambus was up 14% today. Cyber, which was very interesting that name might be bought out, and I was able to get involved in a little bit of that name today. Cadence was up 10% today. So again, you can't just look at one side and say, oh, this looks really good, or this looks really bad. So be careful about how you're getting your information about the market. There's a lot of really good earnings reports today too. SSD was another one, up 10%, but there's also names that are falling too. Now, if you concentrate on strong companies names that are coming out with good, or that are coming out with good earnings, then this is a pretty good thing for you. And we're also seeing some names that reported over the last couple of weeks start to come in a little bit, which will set up buying opportunities. And that's the whole name of the game, is that when the overall market is a bit weak, we want to come back to some of these names. Look at Corning was up 11%. So again, some of these things are surprising me, maybe a little bit to the downside, but a lot to the upside too. A lot of good earnings reports. So please don't be completely pessimistic. Don't be 100% optimistic either with these reports. Now let's get back. I just want to go back to the spreadsheet here for a minute. So bear with me 2 seconds, and we'll just talk about today a bit of today's moves. I mentioned market breadth, which has been weak for 4 days in a row. What's been kind of the culprit with that? It's mainly been the small caps. Look at the small caps and the micro caps. They were down 1.3% for the open. That's IWM, which finished down 60 basis points. By the way, I don't know who or why things are being bid up pre-market. I feel like the market, they're setting up for traps. Maybe the institutions want to sell. They're looking for a little bit of strength to sell into. That could take place too. And I think that's what you have going on. I think institutions are being a little bit careful with this market after it's been up so much. Again, please be strategic about this. There was a note, there was a big note that got, I don't want to say a big note, but there's a note that I saw a lot of people retweeting over and over the last week about hedge funds have this huge short position in S&P futures. Okay, you got to take these things with a grain of salt, right? And why folks are saying that's interesting is because a lot of time hedge funds or speculators, when they analyze S&P data, that that they're usually wrong. Now, do hedge funds really go for their alpha in S&P futures? No, most of them don't. Most of them, what they're doing is they're hedging their long positions, right? There's alpha and there's beta. Hedge funds make money on their alpha, which can be, depending on the hedge fund, long individual names. Now, when they're a little bit less comfortable about the market, what they do is they hedge the beta. So they'll hedge, and they'll either use SPY or S&P futures. So just because they have a short position against their longs, could be against their longs, that doesn't mean like, oh my God, like the market's going to rip higher based on that. It's really poor information to be putting out. And I think you need to have some context and think about things. After a huge run over after the last 3 months, don't you want to have a little bit of a hedge in place? Because what do we know, right? I always talk about what we don't know. There's always uncertainties in the market versus what we do know. Well, we do know that August is one of the worst seasonal months, right? And again, it's just that, right? We're getting into a weak period now of the year. That doesn't mean the rest of the year is going to be weak. So you have to think about your whole year, not just day by day. And I know there's a lot of traders out there that want immediate gratification. They want to make money right away. That's fine to kind of think about making money on a day-to-day basis, but you also have to think out a little bit longer term and say, let this market pull back a little bit, right? If it does, right? And it may not, but if it does, if there happens to be for the rest of this week more weaker earnings reports, then maybe this market pulls back further. But for now, you can kind of tell what's happening and that there's a little bit of digestion in this market. All right. So you could see more red areas. That's something that I always want to point out in these videos, whether there's more green or more red areas. And the areas that outperformed today were not your very aggressive. This is more of a risk off type day. Utilities, gold miners, healthcare went up after the open. But again, I don't know who's bidding up this market so much. So it didn't make any sense to me. Qs were up like 0.5% this morning. Made absolutely no sense to me. And I had said it in the trading room today pre-market. I give audio out pre-market, and I said I don't. This doesn't make any sense to me that the market is up this much. Now let's go ahead and let's look at some charts. All right, so let's just start with the Qs. Now, what you're seeing here is I'm going to start with the 1-hour chart. Notice we've got a little bit of a double top here, short-term stuff, right? So I'm on the 1-hour chart, right? So here was the high for this week, right? The second, and this was where we were pre-market, right? Now we're kind of moving down a little bit. So there's a little bit of a change in tone here. Also note that this box is shaded pink. right? That means bearish 80% rule is now in effect. That means when you start the period either above or below and you break in, it's going to trigger the 80% rule. When we start above and we break in, that triggers the 80% bearish rule. So if you've been waiting to short, right, you could short versus the top of the value area, 636, right? And that's what we've got going on here. This is a change in tone. We really haven't seen this too much so in over the last few weeks. And you could kind of look back, right? It looks a bit toppy. Now, again, what could change here is we don't have to go, it's not a 100% chance, it's an 80% chance using value area studies. And if we break back above this 636.13 level, it negates that bearish 80% rule. Now, let's just zoom out here to the 1 hour chart. I know a lot of people, including myself, who look at the 5-period moving average. I quote that a lot in these end of day videos. We're hanging, we're right at that 5-day moving average. We've done this before and we've kind of held. We've gone down to the 20-day moving average. But again, I don't know based if this is going to hold this time. Watch that 1 hour chart, what I just went over. Here's the cues. They're still above the 5-day moving average. And when you look at the 1 hour chart, we closed right around the low of the day, but this did not trigger the bearish 80% rule. That level is 566.28. All right. But again, it wouldn't surprise me. And again, this is going to be dictated by what happens tomorrow, whether the market likes what Powell says tomorrow, right? We got a Fed meeting tomorrow at 2 o'clock. That's the announcement. And then the press conference, which is the most important thing, 2:30, and that usually lasts for about 45 to 50 minutes. All right, so bear that in mind tomorrow. By the way, they're not looking to cut interest rates tomorrow. The market has priced in that that's not happening tomorrow. A 2% chance of a cut. It's a 65% chance for September. So that's where the language in the press conference is going to come into play, is whether Powell is getting a little bit more, might give in and basically say that, hey, they can cut interest rates in September. Keep in mind, and I'm not going to go into this now, but we are at a very high level in interest rates, right? I know some people look at, oh, well, we do or we don't have to raise interest rates based on what the market is doing in the economy. I'll tell you my opinion about this, as I've said it before. We're standing at 4.5%, right? That's where the Fed has it fixed. That's a very high rate. That is tightening. You leave that rate at 4.5% for a long time, it is going to eventually impact the economy to the downside. It's the same thing that happened when they did this in 2001. It's the same thing that happened in 2008 as well. They had rates really high and it impacted things pretty severely. So that's what you have to think about. How long can the economy stand there when the rest of the interest rates are lower across the curve? Remember, the 2-year, 5, 10, 20, that is dictated by supply and demand. The overnight rate, short-term rate, Fed fund futures, is dictated by the Fed. I'm going to move on here. As I said, I didn't want to dwell on this. IWM is, like I said, has been weak. It's been making a series of lower highs over the last week. It is not broken down, but it has almost fulfilled that bearish 80% rule, 221.88. I'm also going to just quickly look at that daily chart because the 20-day moving average has been holding over the last few months. So we're testing that again. S&P and Qs, where it's a little bit stronger, 5-day moving average is what I'm watching. IWM, I'm watching the 20-day moving average. All right, so that's also that is what I'm watching. And then, of course, I mentioned that we've got a Fed meeting tomorrow. We also have a lot of big earnings report. Meta, Microsoft, and a few others are going to report after the close tomorrow. You better believe that this market could move on some of those results, all right, because they are two very large companies. All right, so I also wanted to talk about a couple other things here, which I find interesting that happened today. And again, they may not be on the top of your list, but this was a big move in crude today. Crude was up 3.4% today, right? So I'm not opposed to looking at, just as I said, it was a little bit more of a risk-off day. Perhaps some of the lower volatility areas of the market, such as energy, might outperform a little bit. I actually got long some PSX today, right? I've traded this name back in here. It worked very nicely for a trade. It's starting to break above its value area again, and it's also above all these short-term moving averages. I'm long PSX. Right? I don't mind having a trade in here. I also like ConocoPhillips getting above its 200-day moving average. Crude strong. I'm going to look at energy names, right? Another thing that was very interesting today was the move in bonds. Now, again, I'm not talking about what the Fed controls. I'm talking about the long-term rate TLT, right? This rally, this is a big move today. This is up 1.7% today, right? Now, it's not above the recent highs, but this should be good for things like home builders, right? Let's look at what the home builders, let's look at two names that reported really strong earnings reports a couple weeks back. As I mentioned, I want to go after strong names on dips. This is not a big dip in Pulte Homes, but it's off the highs of where it reported earnings about a week ago. Again, a little bit of a better entry point than where it was at the highs, 121. We're sitting back here at 117. I like this company a little bit better. This is DR Horton. Notice what this is doing, right? Same thing, huge move on earnings, but it's come back in a little bit. It's testing that gap. I got long this name today, right? And it's also, you could look at this on the 1 hour chart. It's starting to turn back up a bit. So again, I'll be looking for some profit targets here. These are not long-term, real long-term trades for me. They're probably a few days that I'm going to hold these types of things, looking for a move back higher. Again, just understanding that there's some rotation going on in the market. A few other things to watch, right? I was watching the strength in cyber stocks. Again, this was in the first half hour of the day. They didn't really have much follow through, but we know that this deal, according to the Wall Street Journal, that Palo Alto might be buying CyberArk. So this is a really, that's very interesting, could be interesting for the space. It's been grinding higher a little bit. This is the overall ETF, just to look at that. RBRK was an interesting name this morning. Again, a little bit too hot, too early, but I would keep an eye on this name. I did have this on the weekend watch list because I thought that the price action was getting pretty tight here. It did not complete the bullish 80% rule. That's up at 93.75. I just want to go through also a little bit of what happened today, where some names are coming in pretty decently under the hood. A lot of the very high growth names. Look at Quantum, that looks weak. Coinbase, which I try to go long today, based with trying to think it would rebound on the 20-day moving average. It fell through here. Just note it reports earnings later in the week. So you're starting to see some weakness creep in. And I'm just going to go through like symbols really quick, right? So again, some of these things, like this is just coming into the 20-day moving average. Maybe it holds up here. It did this previously where it came in and then it held. So again, the name of the game here is be careful with your entries. You want to be buying the dips in some of these things rather than chasing the strength on the big days. Look at this name. People were talking about this name a couple days ago. Made a real nice move back higher here, but look at it. It was down 13% today. All right, big move to the downside. A couple other momentum names. Look at MP slice through that 5-day moving average. Now, again, this is still way overbought. I would be looking at this down here personally, or even in here. That might get me interested, but no way am I buying this thing up here. This name has to come in a little bit. TMC is another name this was a name that I held about a week ago. I got out of it. I think for small profits, or if I took a couple profit targets, and maybe I get out for the last piece. But this also decisively breaking to the 20-day moving average, also pushed inside the value area. The LiDAR companies, which were really strong. OUST, this was showing a little bit of strength on Friday, completely kind of moving back down here to the downside. Also EVA also coming down pretty decently, right, and breaking its 50-day moving average. So there's a lot of these things that were moving up quite nicely are really getting hit pretty hard. Some other names are holding up a little bit better. So what am I watching that's holding up a little bit better? ASTS, and I've been patiently watching this one. Again, I don't want to go. Some of the adjustments, if you're not familiar with making adjustments, when you see market breadth as weak as it's been the last 4 days, that means sit on your hands a little bit more, right? That means don't go after every trade setup. Be patient, right? Until we know that the institutions are returning back. They're not there right now. But I'm certainly watching the top of the value area, and I'm also watching Rocket Labs, which I talked about too over the weekend a little bit. And I said this name has to come in a little bit more. Since I said that, it's been dropping. Let's watch to see if it will hold the 20-day moving average, but it's way still above the value area for the month. But who knows? Maybe buyers will show up here, right? So that's a couple things that I'm watching. You want a real momentum. And one other name too that had super strong earnings I want to see come in a little bit is GEV. Let this name come in a bit, right? Last time it hit the 20-day moving average, and it's done this a few times now. It's been a great buying opportunity, but be patient. This is not a great entry up here, but you might get one, right? So that's the things that you want to be patient and look for, because I think that over time, if the market's a little bit weak, you're going to get really good buying opportunities in some of the names that you may want to be in. All right, guys, that is it for today's video. Again, be patient, understand the market dynamics here are weakening. They could come back very quickly. So have your watch list ready, and things like, for me, it's Rocket Lab and ASTS. We're still seeing some really nice strength in the semiconductors. AMD has made a colossal move. Congrats to folks that have been long AMD. But yeah, it's extended and it's at resistance here, right? That's 137.40. So again, I always tend to get questions after the market moves. I've got a couple questions about AMD. Yeah, if you were long a week ago, congrats. Would I be buying it here? Absolutely not. But real nice move in the semiconductors. Guys, have a great night. See you tomorrow.